Welcome to this deep dive.
Great to be here.
Our mission today, it's pretty straightforward. We're going to unpack, really understand the key insights from a couple of sources you've shared with us,
Yep.
helping you quickly get a handle on some important stuff happening in the energy sector, specifically the upstream oil and gas space.
And we've got two main pieces to work with, right? Some info from the EAG Inc. website.
That's what?
And an article called Oil and Gas Trends, a Shifting Upstream Landscape.
Exactly. So the plan is we'll start with the big picture, looking at these, well, pretty significant trends hitting the upstream sector right now.
Sort of setting the scene.
Yeah. And then we'll zoom in a bit on one company, EAG Inc. They provide consulting, outsourcing, that kind of thing within this industry.
So first, the lay of the land, understanding the forces at play, and then seeing how a specific player operates in that changing environment. We'll pull out the really important nuggets for you.
Okay, sounds good. Let's jump right in then with that trends article. Oil and gas trends, a shifting upstream landscape. It really does set the stage.
Yeah, it makes it pretty clear that this part of the energy industry, well, it's at a critical point, facing some major global forces that are, reshaping things.
Strategy, operations, the works. And the article points to two really pivotal trends driving this shift.
Where are they?
First, a cooling in U.S. production growth, and second, a tightening of upstream capital spending. Capex, basically.
Okay, let's unpack that first one. The U.S. production slowdown. The source mentions a forecast from the EIA, that's the U.S. Energy Information Administration.
Right. And what's really interesting, I thought, is that the EIA is actually forecasting a dip in U.S. crude oil production in 2026.
Wow, okay, so not just slower growth, but an actual decline.
If it plays out, yeah. It'd be the first annual decline since the initial shock of the COVID crisis.
Right, so after hitting a peak, what was it, about 13.3 million barrels a day this year? Production's expected to kind of ease off a bit.
And the article gives reasons for why this might happen. Declining well productivity is one.
Meaning wells aren't quite the gushers they used to be, especially in shale.
Seems like it. And also, just reduced rig activity. They mention a specific number. Early June, the active oil rig count dropped to 442.
442 rigs. That is significant. Lowest since, November 2021?
Yep.
That really signals a change in how operators are feeling, doesn't it? They're drilling less.
And that directly impacts future production, especially, with shale wells needing constant drilling to keep volumes up.
Short cycle stuff. Quick up, quick down.
So what's driving this economically? The source says it's not just one single thing.
No, it's a mix. You've got falling oil prices, maybe linked to economic uncertainty, weaker global demand forecasts.
And there's cost inflation still biting, squeezing margins.
Yeah, costs have definitely gone up in the key basins.
Yeah.
And the third piece.
Investor pressure. A really big one, according to the article. Investors want financial returns, fiscal discipline.
Right. Not just growth at any costs, like maybe in the past.
Yeah.
They want companies to be profitable, return cash to shareholder.
Exactly. Not just pump out higher volumes.
So you put all that together, companies get more cautious, they spend less, or at least spend more carefully.
And that has knock-on effects, right? For service companies, drillers, even folks planning pipelines.
The whole ecosystem feels it.
Okay, so that's the production side. Let's move to that second key trend you mentioned, the investment side. Capex.
Right, the upstream investment recalibration. The source brings in an IEA projection here, International Energy Agency.
And what are they seeing?
They're forecasting a global decline, about 6% in upstream investment for 2025.
Okay.
That brings the total global capex down to roughly $570 billion.
And the article specifically points out that a big chunk of that drop is because of less spending on U.S. tight oil.
Yeah, that really underlines this shift, doesn't it? Yeah. Pulling back from what was a huge growth engine. It points to broader caution, especially among the independent producers. They're juggling, uncertain commodity prices, financing costs going up, supply chains still a bit tricky.
So investing less, maybe focusing on lower risk projects becomes a safer bet.
Makes sense in that kind of environment.
So, okay, we've painted this picture of a shifting landscape. You might be asking, why does this actually matter to you listening?
Well, these shifts directly impact global energy supply. That's big. They influence investment decisions everywhere in the sector. And, potentially they can affect the cost and availability of energy for all of us.
So understanding these big trends is pretty crucial if you're following where the energy industry is heading.
Definitely sets the stage.
Okay, great stage setting. We see the pressures, the caution, this move towards discipline. Now, let's bring in our second source and sort of zoom in. Let's talk about EAG Inc.
Right, a company that operates right in the middle of this dynamic industry.
The website info shows they work across different sectors, mining, midstream, renewables.
And importantly for our discussion, upstream oil and gas.
Directly relevant. Plus, companies that support the energy industry, too.
They mention having over 20 years of experience. And their mission to be the industry's first choice for consulting and outsourcing.
Yeah, they talk about exceeding expectations, providing a delightful service experience, interesting phrase, and building, lasting relationships.
And they break down what they actually do into 4 core service areas.
Okay, what are those?
First, consulting services, aimed at helping clients get to operational excellence.
Makes sense. Then IT outsourcing, offering, they say, top-tier kind of holistic IT services.
Third is back office outsourcing. This seems key, using experienced experts for things like petroleum accounting, land administration.
Really crucial background stuff for oil and gas companies. Needs to be accurate, timely.
Exactly, helping meet deadlines, getting the right reports out. And the fourth area,
Software as a service, SaaS, providing targeted software solutions that are supposed to be easy to use.
and the site lists specific business challenges they help with. That gives you a good feel for what upstream companies are grappling with.
Like what?
Things like automating and optimizing processes, improving data reliability, always huge, transforming data into valuable information, leveraging industry experts, and optimizing IT infrastructure.
That list sounds very relevant to the trends we just discussed, doesn't it? Efficiency, data, expertise.
Absolutely. And they really emphasize their deep industry expertise, claiming over 100 engagements per year.
That's quite a lot. Suggests they're busy. And they mention an over 80% client rehire rate.
That's usually a good sign, right? Means clients are happy enough to bring them back.
Indicates trust, yeah. They also talk about tailored services, top professionals, and a proven cost reduction track record.
Although, interestingly, I noticed the source also includes some placeholders on the site for specific numbers like projects completed, software packages, and that rehire rate, they show 0+ or 0%.
Oh, right. Like they plan to fill those in later with a specific metrics, a small detail, but yeah.
Just an observation from the source material.
They also highlight some company achievements, like being certified as a great place to work for the 7th year.
And getting the Women's Business Enterprise Certification, WBENC, for 8 years running. Plus, their VP of IT was on a podcast, apparently. Gives a sense of their people being out there.
Okay, so stepping back, how do companies like EAG fit into that bigger picture we painted, that upstream sector under pressure?
Well, that seems like the crucial connection, doesn't it? If upstream companies are dealing with tighter budgets, investor demands for discipline, and needing to be way more efficient.
Then bringing in outside specialists could make a lot of sense.
Exactly. Instead of building huge internal teams for everything, maybe you outsource specific functions. Use consultants for targeted improvements.
Yeah, companies looking to optimize operations, handle complex data, get specific expertise without massive internal investment, they might look to partners like EAG. It fits the narrative.
Okay, let's try and explicitly connect the dots now. Bring both sources fully together. The Trends Report mentioned some key strategic implications for upstream leaders, remember?
Right, things like needing portfolio resilience, focusing on assets with low break-even costs, so they're profitable even if prices dip.
And that capital discipline is, well, essential, especially with investors watching closely.
And the third big one was efficiency-focused innovation gaining ground.
Yeah, using things like AI, analytics, digital tools in the field. Basically finding smarter ways to operate and protect margins, not just drilling more.
So how do EAG's services line up with those strategic needs?
Well, their consulting is aimed right at operational excellence efficiency.
Okay.
Their IT and back office outsourcing. That could directly support capital discipline, right? Potentially lower, more flexible overhead compared to big internal departments for IT or specialized accounting.
Yeah, variable cost versus fixed cost, potentially.
And there's SaaS solutions aiming for automation, better data use that feeds right into that efficiency-focused innovation piece, helping protect margins through smarter processes.
It seems like a direct alignment. And the EAG source also mentions they participate in industry events in 2025. Enverse, EVALI, NAPAC, IFS Connect.
Right. And those events, if you look them up quickly, they focus on things like energy software, data, automation,
Petroleum accounting.
industrial AI, innovation. It's exactly the stuff the trends report highlights as strategically important. So EAG is putting themselves where those conversations are happening.
So pulling it all together, the trends report wraps up by saying the sector is in a phase of, what do they call it, pragmatic recalibration.
Yeah, pragmatic recalibration, meaning operators really need to double down on operational efficiency, keep a tight rein on capital, and use technology-led innovation.
To navigate the volatility, basically, and set themselves up for the longer term, not just chasing short-term growth spurts. Okay, so let's quickly summarize the key takeaways from our deep dive today. We've seen the upstream energy sector is definitely navigating a major shift.
Yeah, slowing U.S. production growth, tighter capital spending, driven by economics and investors wanting solid financial performance.
And in response, companies are really sharpening their focus on resilience, strict capital discipline, and finding efficiencies through innovation, trying to protect those margins.
And then you have companies like EAG Inc. offering specialized services, consulting, outsourcing, technology that seem designed to help firms tackle exactly those challenges.
Optimizing operations, managing data better, leveraging outside expertise in this very dynamic market.
So understanding both these big macro trends and the kinds of specific services out there like EAGs, it helps you get a much fuller picture of how the industry is actually adapting day to day.
Definitely. Now, the trends report finished by asking upstream leaders a question. Are their assets, strategies, and workforce really ready for this next chapter? So maybe a final thought for you listening today. Given everything we've discussed, its intense focus on efficiency, on capital discipline, how might exploring external partnerships for specialized services or technology fit into your thinking about building resilience and getting ready for what comes next in this shifting market?